Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in, take a look, see what's going on today. If you want to follow me, it's @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics and subjects, looking for investment opportunities, sharing those opportunities with everyone in the community. And you can see the special coupon code that we've got in the corner there. So Lynn Alden says the dollar index is dabbling in news cycle lows today. Barely got any flight to safety bid in the past couple of weeks either. So people are not running into the dollar uh, for safety. Now, when I look at this chart, we've got that, and she's got a nice little fun zone below that. This is what I see. Might be a little bit different. Usually, when you get down at these bottoms, I'm just going to make an observation here. I see this all the time. You usually get double bottoms like this. You get kind of a double bottom. Let's keep going back here if I can grab. So when you look at these bottoms and how they turn, you get these double bottoms all the time here. Now, you don't see these double bottoms anywhere else. Like if you were to look at a midstream, you don't see them midstream. You've got like things that break down to the downside. They come up, they break down. A lot of the times when I look at all these patterns, the billions of times, and you were to zoom in on these patterns, you'll start to see certain characteristics on the right-hand side in almost all of these. And I'll zoom in for the viewing pleasure here to see if I can see those characteristics. Uh, so what you'll see is you'll see a strong move off the bottom, and then you'll see a downward facing pattern. Strong move off the bottom, weaker selling pressure. So you get less days going up, 1, 2, 3, coming up, like an impulse move up, and then you come down. And then you have downward facing consolidations. And you can get multiple downward facing consolidations here. Sometimes this even dips like that before going up, which is our famous slingshot cheetah pattern there. And I see that a lot on these bottoming patterns here. Let me see if I can find another one. There's another one here. So again, we had a strong move off its bottom. So you come on down, 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 down. You come a strong move up, and then you get a downward facing consolidation, and then the breakout. And that would ultimately be a double bottom going across there. Sometimes on the right-hand side, you break out and you can come back below support and then slingshot it again. It gets everybody messed up that's watching it. So that's the pattern that I see. And then when I apply that pattern to the current spot that we're in, and this pattern is pretty reliable. I mean, I look at this stuff all the time. So you get a strong move up, small little red candlesticks all the way down in a falling wedge. We broke that to the upside, and only the past 3 days has this pulled on back. Now, this to me looks like we are wanting to go higher in the dollar index, but the past 3 days is a question mark. Why? Because it sticks out. It sticks out to me. Why did we get this big red candlestick in the dollar? Why here? Why now? That's the same day that they smashed crude oil as hard as they could. Now the data starts to line up. The market was positioning a certain way for the dollar to go up, and I think oil to break out. But this is when Trump tweeted, and that is like a red flag to me. It's like a red thing going off the back of my head. It's like ding, ding, ding. These guys are looking at this, and they're coming out and trying to push the price lower. That also means that the 10-year yield these past 3 days are now in question. The setup that we have here were for yields to break. this setup here, this setup here. Like this is a good setup to try to work its way on up. But then the last 3 days, you can see it pull on back. Interesting is what I'll say. It's just things that you see. And then, it correlates like the last 3 days with some of the things that people are talking, Trump tweeting and stuff like that. It's just kind of like, interesting. Very interesting there. But if they're going to try to push this dollar lower, they need yields and they don't want oil to break out. Because yields going down and the dollar going down, they generally move together. Another thing, we don't want a weaker dollar if you live in America. A weaker dollar means everything gets more expensive. Anything that's imported gets more expensive. And things around America will get more expensive too because your dollar is going to be able to buy less of whatever it is. Coming down, HFI research, the natural gas market is tighter than what it looks. So I think this is a projection of where we're probably going to end up being as we come through. Now we're coming through heating season, so we might dip a little bit, but that's the projected kind of move that we could be at starting winter season or winter. U.S. crude inventories hit an 11-year seasonal low. It says U.S. crude inventories hit 11-year seasonal low. Stocks fall amid strong summer driving demand. Another thing to think about, we're only looking at this from an unadjusted level. So we're just looking at the inventory level. If you adjust the inventory level for days of coverage, we are way lower than an 11-year seasonal low. We are way down because our demand obviously goes up over time. So when you adjust it to the demand or days of coverage, this is a lot lower than what most people think. BESSENT is pushing a high-stakes strategy to revive a faltering U.S. economy by reflating the rest of the world. This is his proposal. Weaken the dollar, targeting a DXY level of 88, and use global momentum to pressure the Federal Reserve into cutting rates to 2%. The idea marks a shift in focus from domestic stimulus to international demand as a lever for easing monetary policy. BESSENT'S approach reflects growing concern in Washington that the Fed is keeping rates too high for too long amid signs of economic strain at home. If that is his plan and he's trying to drop the DXY level, he probably started that plan 3 days ago. That would be my guess. He's trying to drop the dollar. Now, we have positive signals on the dollar, the DXY, to move up. We had positive signals that oil was breaking out. Trump came out with a tweet. They hammered oil like no other. They came out with some other news about a peace settling deal in the Middle East. I don't know how legit any of the news is. Who knows? And if this is his plan, he's going to have to bring rates down, and the dollar will come with it. So that means buying an obscene amount of treasury bonds is probably what he's going to do. If he can do it. I don't know if he can do this, guys. The market might steamroll him. Z4 Energy Research, distillate stocks at lowest level for this week of the year, this century. And there we are, falling out of the cloud to the downside. That also means that oil and diesel is mispriced. Unless something in the future is coming, that means that we have an economic slowdown. It's kind of perplexing to see inventory levels be down as much as they are, and this is final inventory. So it's not like we are moving oil into distillate inventory. We've got low inventories across the board. We even have low strategic petroleum reserve inventories. So why do we have low oil price? Why aren't oil prices going up to correct the inventory? Is the market seeing something in the future where we're going to get a bunch more supply? or a demand that's lower than where we're at today, I don't know. I'm betting that this will eventually move the prices up. We've got Julianne Geiger. She says the EIA inventory moves for 625. So this was last week. Crude is down 6 million barrels, gasoline's down 2 million, and distillates are down 4.1. I hate to say that, but that is a monster draw across the board. I mean, a monster draw. That's over 10 million. I mean, that's 6, 10, 12 million, roughly speaking, of a draw. 12 million barrels against crude, gasoline, and distillate. So why are we priced the way that we are? Is it because of the plan here that the cent is trying to weaken the dollar? And the only way you can weaken dollars is to get yields down. So if you get yields down, and the only way you can do that is buy a bunch of bonds. But he can't have oil go up because oil is inflation sensitive. And that would send an inflation wave through the system. So how are they going to pull this off? I mean, I'm being serious. Like, I don't know how they're going to pull this off. We're starting to see a lot of inflation sensitive assets move upward. Like fertilizers and soft commodities look like they're bottoming and trying to break out higher. We're starting to see other signals out in the market, like platinum outperforming gold, which is a more inflation sensitive asset. If inflation sensitive assets, if he's going to try to slow this down, I mean, he's getting in front of a train here. We're going to see what he can do. This train, they can't stop money printing. That's one of the trains I'm referring to. The other train is that the inflation train is coming. And is it going to roll this guy over? I don't know. I mean, these guys are going to pull out every trick in the book. So you need to be ready for what they are potentially going to do. They're going to release false news. They're going to release maybe perhaps false news about Middle East stuff. They're going to release false stuff directly related to a bunch of different things that I can't think of at this moment to try to get this outcome. That's the only way they can try to get that, in my opinion. Or they're going to send us into recession. Bessent will never default on the national debt. That's what he says. Well, if you're never going to default on the debt, that means you're going to print a buttload of money. If you're going to print a buttload of money, how are you going to get interest rates down with inflation being up? Like, it doesn't make sense, guys. Like, the plan here, you guys have heard Lynn Alden, nothing stops this train. They have to continue to inflate to get that debt away. If they don't do that, the system locks up. The debt will collapse on itself. If they can't stop it, what makes you think they can lower interest rates and pull off miracles here? I don't think they can. So I'm watching the charts to see the positioning here. In say like the dollar, this one has the dollar moving up with this position here. Ever since Trump tweeted, that's what occurred after. That was the day that he tweeted. And I've been watching and I'm like, okay, what are they doing behind this? They must be destroying the dollar to try to bring the 10-year yield down. I mean, they got to destroy the living crap out of this thing. You know how many bonds they're buying here these past 3 days? I mean, it is probably ridiculous. But that's my best guess of what is going on. And they needed to hit oil in order for it to work. JC Parrott says, now this is an interesting one too. XLI, are you still ignoring the industrials? They also made new all-time highs today. So this is breaking out. Industrials, right? If I were to do a search, industrials do well in what part of the cycle? We'll put stock investing. Industrial stocks tend to perform well during the early and mid stages of an economic expansion, also known as the recovery and growth phase. This is because the sector is highly sensitive to economic growth. There it is. So what do you think if the industrials are starting to break out here and it's very sensitive to economic growth and inflation? Here's step number one. What is platinum doing? Platinum is an inflation sensitive metal. Look what it did. Broke out. Then you compare platinum divided by gold. Gold is a fear trade. Platinum is an inflation sensitive metal. That's a downtrend line that's broken to the upside. And then fertilizers are another one that are very inflation sensitive. If every single signal that we are seeing, industrials, platinum, all these different inflation sensitive signals, and the ratios are breaking out, what do you think crude oil, which is one of the most inflation sensitive assets, what do you think this was trying to do here? It was trying to break out. And what did Trump and all those guys do? They hit it with everything they got. Bam, bam. Now, I don't think it will permanently stay down here. I'm just letting you guys know what their plans are, how it conflicts with what I think is coming based off of the things that I follow. And I don't know how they're going to stopping this move is going to be a tough one. It's going to be a tough one to stop oil from moving on up, in my opinion. But there's industrials, and that generally is looks pretty bullish here. The crazy thing about the U.S. housing market is how under leveraged it is. Could not be further from an over leveraged speculation frenzy. But this will get 40 likes, and if you say it's a bubble, you get 4,000 likes. The average loan to value for all outstanding mortgages is only 46.9%. Only 0.3% of borrowers are underwater. Total borrowers in delinquency is creeping higher, but it is still very, very low. You can't have a blowout crash if there's no leverage in the system. And the average loan to value for all outstanding mortgages is only 46.9%, which is incredibly low. If you look at kind of the last market here, this is your loan to value ratio. Look at the loan to value ratio just rocket higher here. We're at a pretty resilient time for the housing market in terms of leverage. That's all I'm getting at. Here's Vicky Holub, Occidental Petroleum CEO Vicky Holub says the good thing about the Berkshire investment is that the view it to be for the long term, because Buffett is bullish on oil prices and he loves the Permian Basin. Does she expect Berkshire to buy control of Oxy? I don't. So Buffett's really bullish on oil. I know he's had a lot of meetings with Vicky here, and he took a pretty big stake in Occidental Petroleum. I think he owns something like 20 or 30% of the company. Last time he took a big position, he took a big position in PetroChina last bull market. That made him a lot of money. It wasn't as much as some of the mid cap and small cap companies, but he can't move that type of money into anything that is small. So here's a so dollar priced oil. Oil is still on a pretty chart when zooming way out, and we're still squeezing up here on top of a consolidation zone, which is 1 hump, 2 hump, 3 hump, breakout, consolidation on top of it, and then I think we're going to see a big move to the upside. Too many people are focused only on supply and demand. Although supply and demand are favorable for higher oil prices, I think the real move is going to come from the dollar. A lower dollar is going to send all of these inflation-sensitive assets way higher. And that's commodities in general. And precious metals and anything that you price the commodity or precious metal in, if it's priced in dollars, it will go up. That is what is going to be the big driver. It is a dollar going down in value. Freight futures AM update, dry bulk is down 1%, Panamax is up 3%, and then tankers down 3% for VLCC, and Suezmax is flat. HFI Research, I like some of his stuff. I think he's thinking with the right mindset. He says, and this is exactly how I view it. If global oil demand reaches 106 million barrels per day, which is literally probably next year, Saudi is producing 10.5 million barrels per day, which is on the upper end of what they've been able to hold consistently. And U.S. crude oil production is at 12.5 million barrels per day. Sell your kidney and buy energy stocks. For now, we are at 104.3 million barrels per day. Saudi's at 9.3 million barrels per day, and the U.S. is at 12.85. This is when the squeeze occurs. The squeeze occurs around 106 million barrels per day. I agree. That's when things get really, really tight. Now, we're not that far away, and I think that we've got maybe 1.5 million to 2 million barrels of spare capacity. That's it. And then we're gonna squeeze that spare capacity here sometime 2026, maybe. I don't know. We're getting close. Now the market's going to be forward looking, and we'll see what happens. We might get a sloppy end of year 2025 before 2026 tightens up, but we'll see. We're going to ride through it, and I'm going to be looking at investments here because the market is forward looking. The API reported minus 4.22 million barrels of a draw, and we had minus 3.76 million barrels. The EIA will be close, and if that print hits, the U.S. commercial crude storage will be near 2022 levels. 2022 was when we had $100 plus oil. So what's going on here? Why do we have inventory levels the same as 2022 and dropping like a rock, but yet oil is priced in the 60s? Does that make any sense to you? Inventory-wise, it doesn't make sense to me. From potential war, doesn't make sense. Is someone back there doing something? Because when I start to stack up the data, it's kind of like, all right, what's going on here then? Why are we down here? I can't figure out why. Eric Yoon says 3 years ago, someone spent $1.7 million to buy this ape picture. That one. Today, it's worth $761. $1.7 million for a cartoon ape, but $761 today. Either this is the worst trade in history or the cleanest way to launder money in broad daylight. Here's my opinion. What's up with Bitcoin? I mean, isn't this the same thing as Bitcoin? And isn't the things around, like the emotions around this market that occurred 3 years back, isn't it in crypto? Why is someone paying X amount of money for a hexadecimal system that can be created for basically nothing? I don't know. Your cost curve, I mean, this is probably the largest disconnect between the cost curve and the actual value of what you're getting. Oh, but it's backed by energy. No, it's not backed by energy. It uses and consumes energy, yes. It does not mean it's backed by it. Existing home sales around recessions, you can see that a lot of it, we could have already been in a slowdown, and we're coming out of the slowdown. But those are the ones in recessions there. You can see the bottoms and what it looks like. So this is a slowdown there. You can obviously see it in home sales, but that doesn't mean that prices just start rocketing lower. My biggest disconnect between everyone else is they'll say, oh, it's this huge bubble, it's huge this, it's huge that. It's like, I don't think prices are going to go down very much if they go down at all. Everyone else when I see the doomers are calling for very large price declines. I don't think we'll see on a national basis, like the average national basis, I don't think we're going to see a 20, 30, 40% decline in home prices, guys. I don't believe that. If we have a flat year or a couple percent decrease, maybe, but not the extent that I hear some of these people talk about, which makes me think that they are literally delusional. Every recession in the last 35 years started with a violent drop in the 2-year yield. I completely agree. Completely agree with that. We're not there yet, but we're dancing on the edge. The 10-year, 2-year spread is bull steepening. The 2-year breaks lower. It signals the Fed has lost control. That's your cue. Watch it closely. Totally agree with that. And we haven't seen the 2-year drop. That's what I've been watching. Every market update, the 2 and 10 spread, and also just the 2-year in general. And then nice gap and go from the trannies, transportation. Again, that was a downtrend that's breaking. That is also a signal that economic growth is coming. Copper breaking out to the upside is too, if we were to get a breakout in copper. Watch those closely, guys. And that will also be inflationary, I think. But how can you have transportation go up and crude oil go down? That makes no sense to me. None. Zero. Zilch. But that's also why when we look at distillate and transportation. So transportation is eating through, oh, I blew right by it, is eating through the inventory. And that matches. That is a match that I look for. I want transportation breaking out and I want to see the distillate inventory drop. Check, check, and check. So then why the heck is crude oil going down? I don't know. Doesn't make sense. And then obviously, silver's quarterly close is next Monday. If it holds this level, it's the second highest quarterly close ever. So here, yeah, that's looking good too for silver. Here's a quote here. If he is the right kind of investor, he will take added satisfaction from the thought that his operations are exactly opposite from those of the crowd. Benjamin Graham. Oil prices. It says, I'm usually hesitant to chase assets once they hit the headlines, but when we take a step back, the recent pullback in oil looks technically reasonable. After a prolonged consolidation period, oil now seems to be stabilizing and, in his view, could be setting the stage for a new leg higher, which I agree with. On the fundamental side, I believe energy prices still appear significantly undervalued. The U.S. inventories continue to draw down. Rig counts are starting to trend lower. Well, not starting, they are way lower. Geopolitical tensions are structurally escalating. Positioning is near its shortest levels of the past decade. This is a macro setup and deserves attention. Totally agree. Totally agree. I think we were trying to break there and they panicked. I honestly believe that. I think we were going to break in oil. We started breaking out and they panicked. Bessent panicked. Trump panicked. They said, send out the army, hit this thing with everything you got. It was kind of like silver breaking out and they panicked and they held it down for a little time. All these things will eventually break and they're probably going to break violently if they're in there doing what I think they're doing. And that's what I've got for today. That's where we're gonna end it. So that's what I've got. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And that's all I've got for today. So we'll catch you next time. This is Finding Value.